What's going on, guys? It's the Bulls and the Bears here with a weekly recap video for the wheel strategy. We just wrapped up the second week of December, and man, was it a bad one. Just look at the daily chart. 4 red days in a row. So from Tuesday to today, Friday, we had one little green day Monday and a nice gap up for CPI, and then immediately sold off and never really stopped. We were as high as 410, and we closed at 383. It's a pretty big difference. That's like a 7% drop from the high of the week. From 410 to where we close is about like a 7% drop in 4 days. Pretty nuts. And a lot of that had to do with the FOMC meeting. We raised 50 basis points. Powell sounded pretty hawkish. The median expected rate for 2023 increased than from that of September. They said the expected rate for 2023 was going to be 4.6% in September when they met in September. Now, after this week, they say it's going to be 5.1%. So that's a hawkish tone. That means rates are going to be higher, or maybe the Fed will not cut rates as quick as people think or might previously thought. So, yeah, it's just not good. And I mean, this isn't a big surprise. I mean, he's been sounding hawkish this whole time. He hasn't changed that. It's just the market finally woke up to it, or everyone finally got on the same page about it and started selling together. Because at the end of the day, the market's driven by fear and greed. It doesn't really act rationally to fundamentals or macros all too often. You know, if a lot of people are feeling greedy and they want to buy it, the thing's going to go up regardless of what's going on. So finally, it seems like we're back on the same page and we are moving lower, which is something I called out when we hit the top here. I figured we'd hit the top of this trend line and move lower because I saw no reason for us to break out and rip up. And that's playing out. And we're getting closer to the bottom of this big trend, which I actually adjusted the bottom line. Let's go to the weekly chart. So this bottom orange line, I moved from where I had it before. I think it's a little better now. So you have the tops from back here, January 2018, September 2018, they acted as kind of resistance. And then over here after 2020 or during 2020, it acted as support. And then it just hit off of there in October when we had our most recent low. And now we might be heading back towards that line. We just hit the top for the 4th time. Why not hit the bottom for the 4th time? So that's what I'm expecting. A move down to 350, probably a move beyond the lows of 350. We'll have to see what happens. Could be a while before that happens, but at the end of the day, I think it's coming. So that's SPY, a nasty week. Overall, closed down 2.5%. A wild week, was up 4%. Now it's down 2.5%. A wild ride for sure. So what happened with our positions? Well, there was a lot going on this week. I had 5 positions of shares, and that was Suncor Energy, CTRA Energy, VF Corp, Coles, and then of course ZIM. And we'll start with ZIM quick because it's quick. There's nothing really much to say except that I sold a covered call. Well, 2 covered calls because I have 200 shares. I sold 2 covered calls yesterday. We had a pop up. Let's go to the 15-minute for this one. Here we go. So on Thursday, we had this pop up above 18. This big rally. You can see the range has kind of been trading in between like 18 and 1750 pretty much for the whole week. It's just been getting crushed. And we finally had a big surge yesterday morning. And I knew in typical ZIM fashion, ZIM integrated shipping, that it would sell off. No pops last long enough with the stock, or they don't last long. And I figured with 1.5 days to expiration, it was a safe bet. So I actually kind of was a little bold here, and I sold in the money calls. So we were at 18.10, trading at 18.10, and I sold the 18 covered calls. It was in the money. I got great premium, but I was like, this rally is pretty extended for ZIM's purposes. I wouldn't be surprised if it just rolls right over. So I put my money where my mouth was, and I sold calls there. And sure enough, that's what ended up happening. It actually did gap up a bit today and push up to 18.50. But again, in typical ZIM fashion, it just sold off completely. And now look, we're at 17.55. I didn't let these expire worthless though. The fact that we traded above 18 today on expiration day made me a little worried. So as soon as we got under it, and I was able to close it for a decent profit. I took it. So I sold 2 covered calls for 35 cents each. I closed them for 10 cents each. So it ended up being a net premium collected, or net credit collected, of 25 cents per contract, which means I can reduce my cost basis by 25 cents. And I believe I already did that. Yeah, 26.83, right? Yeah, 26.83 is my cost basis. That's way up here. I already adjusted that today, so that's good. And now I can get rid of this green line. And that's ZIM. I was able to take an opportunity to sell some covered calls and reduce my cost basis. And I'm going to continue to do that every time it gives me that opportunity as we try to dig ourselves out of this hole here. Next stop is Kohl's. Now this one got assigned last week, just as I did with all my other names on the bottom banner. And I sold a covered call at 28, 2 of them, because I have 200 shares. I got 22 cents a piece for them. We were above the covered call on Tuesday. So let's go to the 15-minute chart again. We gapped up with the CPI gap. We were above it. We were above my adjusted cost basis, above my covered call. Things were looking good for a moment. And then, well, now they don't. Now Kohl's is at 26. My covered call was at 28, so it expired worthless, which is okay. It's not too far underwater to where my position is like looking like ZIM. It's not there, at least not yet. So, all right. Covered calls expired worthless. I can lower my cost basis and do the same thing next week. So we'll do that right now. These, again, expired worthless, so I collected, or I kept all 22 cents per contract, which means I can reduce my cost basis by 22 cents here. So my blue line, I can bring down to 27.60. Boom, new cost basis. See how that adjusted lower? We're that much closer to the current price and that much closer to profit territory. That's the beauty of selling options. All right. Now, VF Corp. Same type of deal as Kohl's. In fact, this looks a little bit worse. It was above my cost basis this week on the CPI day. Not above my covered call, though. Covered call was at 30. I sold 1, got 15 cents. It was way up here. We didn't really come that close to getting above it. And now we're way down here at 26.37. That expired worthless, as all of them did. Just a spoiler alert. Expired worthless, I kept the 15 cents, and now I can adjust my cost basis by the 15 cents. So my cost basis will go from 28.80 to 28.65. Boom. That much closer to the current price. Moving on. Suncor Energy. This one looked very promising. It gapped up after CPI and it stayed way up here, above my covered call, above my cost basis, above everything. It sustained that. I mean, after CPI, the market sold off really hard. It gapped up, but it sold off. Suncor Energy didn't. It stayed up here. And then the next day, after the FOMC meeting and things got a little hairy, Suncor was still trading up here above 31. And then Thursday, we gapped down and sold off pretty hard. But then we rallied again. By the end of the day, we were still above everything. We were still above the covered call. It was looking like this was the one position that I was actually going to get assigned on. Until today. We gapped down, we sold off, and we tried to push back up by the end of the day. Ultimately, couldn't reclaim either lines, my cost basis or the covered call strike. And, well, the covered call is expiring worthless, and I'm still holding this position. I collected a fat 30 cents on the contract, so I'm very happy with that. It's a nice premium to collect there. And that's going to drop my cost basis down to $30 per share. Down from $30.30. So just erase that. Look at that adjustment, huh? Now my cost basis is right there, 8 cents away from the current price. That's pretty damn good. That's the power of selling options. So that means, assuming we stay around here by the open of Monday, I should be able to get a really nice covered call that's well into profit territory and is going to pay good premium. That really positions myself for a lot of upside reward, you know, making all the money on share appreciation and getting decent premium on the options. That's the best of both worlds right there. So we're going to switch to the daily chart. And actually, no, we're not done yet. One more, CTRA Energy. So that was Suncor. This is my other energy name, CTRA. This one, like Suncor, was pretty close to, you know, looking like a winning trade. but not as good as Suncor was. Suncor was actually above my covered call strike for a lot of most of the week. Cortera, not so much. It came close right here, but then sold off. And then yesterday, I had a really nice push at the end of the day, came pretty damn close to my covered call. At the very least, we were above my cost basis down here at the blue line, but that wasn't sustained either. Gap down, just like Suncor, sold off. A nice rally to end it, but still below everything. So that call expired worthless. I got 18 cents for the one contract that I sold against my 100 shares. So I can get rid of that. And I can reduce my cost basis now by 18 cents. So we're going to go and edit this line here. So my cost basis is going from 24.85 to 24.67. Now all of a sudden, just like that, I'm in the profit. My cost basis now sits below the current price by only 5 cents. So it's nothing crazy, but like that's a big improvement. I mean, to start the week without having your shares locked up by a covered call and having those shares in the money, in profit territory, that is the best way to maximize your profits, to maximize your gains on the position. Because now I can sell covered calls at an excellent strike for excellent premium, I'm sure. You know, given the price of the stock. It's a cheap stock, so I'm not going to get like $50 in premium on a covered call that's $2 above my cost base. It's nothing like that. It's not going to be an insane reward, but it's going to be a maximized reward for sure. So that's great. We'll have to see where we gap tomorrow on Monday, how the initial direction is, but this is poised and primed to be a really nice covered call position for next week. I did some call credit spreads on SPY this week. On CPI day, I did a call credit spread at 410, calling for SPY to stay above or below 410, and that worked out perfectly. That thing completely sold off, and I was able to get out of that. So I sold that credit spread for $40. I closed it for 10 and profited $30 there on that trade. I did the same thing yesterday at the 403 level. Right? Was it yesterday? No, it was Wednesday. On Wednesday, the very next day, before the FOMC meeting, I really strongly believed that we were going to move lower following that meeting. And when we started to push up at the beginning of Wednesday, I decided to sell the 403 call credit spread, thinking that SPY would close below 403. It did trickle up most of the day, but then when Powell started talking and the rates came out, boom, we got the sell-off that I was expecting. And I was able to close this one for a profit. I sold it for $47, closed it for $24, and I profited $23 there. And then there was also a Tesla cash secured put that I did. A little bit of a risky move. I just played it recently and was counting my blessings that I got out of it, because look at it now, it's at 150. I sold the 145 cash secured put. It didn't even get there. And that 145 level is a hell of a lot better than the 195 I was playing a couple weeks ago. It's in a really nice demand zone, so I actually wouldn't have been that upset about getting a sign there. I think that actually would have been a very good opportunity. But it's a big part of my account. That's the only real downside and risk. So I didn't hold on to this put long. I was able to get a profit, but I just decided to cut it for a $20 profit. I sold it for $70. I bought it back for $50. And I profited $20, so nothing crazy there. But I saw a good opportunity. I mean, worst case scenario, I get assigned at 145, and I think that's a great price to get assigned. At least given the context of that week, of this week, it would have been a really big drop to get assigned this week. I think that would have been a good position for a bounce the following week, just because it would have been so extended. I mean, it's already oversold as we speak, and it's not even at 145. So. That was it. Those three trades amounted to $73 on the week, bringing my total December profits to $122 so far, with a couple weeks left to go. A relatively slow start to the month, but if any of my positions get assigned on covered calls and my shares get called away for a profit, that should greatly boost the December numbers. So we'll see what ends up happening. And before I go, I'm going to wrap it up with the Webull account. I haven't showed this much lately, but some of you have been asking. So here it is. Account sits at 23,800. So that is down quite a bit. A lot of it's because of ZIM getting crushed. And then, of course, all these open positions that I have are for the most part underwater, so more losses there. So total account value is taking a hit, but I'm concerned with the realized P&L. That's what I'm really tracking. I'm using this portfolio to generate income. So all the realized profits are profits that I can actually withdraw and put in my pocket, regardless of the unrealized losses that I have, because this is all cash based. There's no margin or leverage being used. This is only cash. So I can withdraw every profit that I have and it won't affect my open positions. And my realized profits, although cumulative P&L is $3,800, I've actually realized $6,100 in gains, in profits that I'm actually able to withdraw. That is money that I didn't have before. So that's great. Up $6,000 so far since starting in April. My records in my Excel file are a little bit higher than this. I believe, yeah, you can see it on the screen. On the banner, I have 6,200 in profits realized when this says 6,181. I think that has to do with fees, because I am getting charged SEC fees on selling options. So there will be small discrepancies, but for the most part, over $6,000, which is over 30%, 30 or 31% gain on my account since April. And that's only going to be like 9 months. And we're not even done yet. So 9 months making 30%, that's awesome. Obviously a 12-month annualized return is going to be greater, because this is only 9 months, so maybe that's on pace for like a 40% annualized gain. I don't know, I haven't done the math, but so far so good. The open positions do hurt. That's why my cumulative P&L is so much less than my realized gains. But, that's all par for the course. As long as we're in companies that we trust for the long term, that pay dividends, that make money, then in the long run, it'll all come out in the wash and we'll be back to an elevated account value. So in the meantime, we're just going to keep doing our thing, selling options, collecting premium, and realizing profits. So that's going to do it, guys. Thank you all for watching. Make sure to like the video. It helps a lot. Subscribe for more content. And as always, I will see you all next time.